In 2026, it's time to get serious about your trading. Let's take things seriously this year. And in this episode of the Stoic Trading Psychology Podcast, I wanted to talk about 5 things that I would focus on if I was a beginner trader in 2026. We are ending 2025. I've been trading for about 6 years now, and the last couple years have been fantastic, and it's been a long journey. But these things that I will be telling you, these 5 things, will definitely help you get on the right path in trading. So please pay attention. Let me know what you guys are going to implement out of these things. I'm very curious. By the way, my name is Kevin. If you haven't listened to any of my stuff or watched any of my YouTube videos, my name is Kevin, also known on YouTube as FX Telepath. Hope everybody's doing well. Hope 2025 was great. If you did not have a profitable year in 2025, don't worry about it. In 2026, you're going to take things seriously, and we're going to get serious about trading and hopefully put you on the right path. And look, you might do all of these things and you might only be somewhat of a break-even small winner trader, and then 2027 should be even better. So this is a long-term game, and I don't do any sales pitches or gimmicks or anything in here. It's everything that I truly believe in. So here are the 5 things that I would focus on in 2026 for trading if I was a beginner. The very first thing I would do is to immediately unfollow, unsubscribe to all of these fake gurus who are using these types of marketing tactics. If they have P&L in their screenshots, hopefully, I'm sure you guys know what a YouTube thumbnail is. When you go on YouTube, let's say you type in how to trade Forex or whatever. The thumbnail is the picture in the video. There's a thumbnail and a title. So if the thumbnail or in the title has things like this, $100 per day, or just P&L, like saying, like, let's just say it's a P&L screenshot of like 30 grand, or $100 a day. The best one now I love is like $50 into $50,000, as if they turned $50 to $50,000, which they did not. I promise you, they did not. Those types of marketing, it's pure marketing, and they're basically just trying to psychologically manipulate you to watch their video, and then in turn probably subscribe to their way overpriced $1,000 course where they don't actually teach you anything. So the P&L screenshots, the $100 a day, promising these crazy things, that is a huge red flag, and that is not going to lead you down the path to being a professional trader. Another big thing is if they show money, there's no reason to have any money at your trading desk. I've been trading for 6 years. At no point have I ever had more than like $100 cash on my desk. And that $100 cash on my desk was like because I was counting something, or I don't even know why. But I don't take pictures of my cash for my Instagram on my trading Instagram. That's ridiculous. Showing cars. Showing cars is a big one. For whatever reason, even I am so guilty of this. Basically, the reason I wanted to become a trader, I wanted a Lamborghini so bad. I love Lambos. They're my favorite. I would buy all the Lambos in the world if I could. And a lot of these people, these gurus, they use cars to get you to click, because who doesn't want that kind of car, right? You know, as I've matured over the past 6 years trading, I've realized that there's more important things than that in life. Still love the cars, right? And you guys don't even know what cars I have. Nobody knows what car I drive or what cars I drive. Nobody knows. Because why? Because if I had a Lambo, how does that help you with trading? It literally doesn't. It's just a marketing tactic. It is ridiculous. And another big one is watches. I've seen so many posts of like, they hold their watch up like they're looking at the time while they're showing their fake P&L. A lot of these are combined, right? Where they're in their Lambo. In the driver's seat, you can see the Lamborghini icon on the steering wheel, and then they've got their Rolex. That's most likely gold, and then they have their P&L on their phone. And I've been over this so many times. P&L can be easily faked. P&L screenshots are so easily faked. I had one guy comment like, "Oh, let's show each other our P&L. Let's see who's better." It's like, okay, you go first. Because I can just create one that's better than yours, because maybe I only made $500 today, and then maybe you actually made $700. but that's fine. I'll just fake it, right? To win this stupid challenge. I wouldn't actually do that, but I wouldn't actually accept the challenge anyway because it's so dumb because everything can be faked. But showing money, cars, watches is such a red flag. It is ridiculous. It's just used to psychologically manipulate you, and it doesn't actually teach you anything. Yeah, sure. I'm sure there's some basic things in the video that you actually learn. I'm not saying that it's all junk, but it's not like, so my whole YouTube channel is pure education. I don't show my face. I don't show my money. I don't show my cars. I don't show my watches. I don't show any of that because it's not helping you become a better trader. It's not helping you become a professional trader. So number one, stop following these people. Stop, unsubscribe from them. I know many people who I thought I respected, and then all of a sudden they start putting P&L in their YouTube thumbnails because, I don't know, they're desperate or whatever. It's a huge red flag. Stop following these fake people. It's ridiculous. Start following, there's plenty of good channels out there. Start following people who are actually teaching you things and actually helping you learn. Number one. Number two, become a stoic person to become a professional stoic trader. Focus on improving your discipline, and that will shine through in your trading. I just did I won't touch on this too much because the previous podcast to this one, titled Become a Better Person, Become a Better Trader, it touches on that in full. So I highly recommend you guys go listen to that podcast. I will touch on it in a bit here, but after this, I definitely recommend you guys listen to that one because it's probably one of my most important ones, and I'm going to be most likely doing probably a part 2 to that as well. So we need to work on ourselves, just in life. Become stoic. If you guys don't know what stoicism is, highly recommend checking it out. It's just a way of thinking. And highly recommend the book Meditations by Marcus Aurelius. I've talked about it before. That book absolutely changed my life from the first time. And that's another thing too. If you're going to read a book, read it like as many times as you can. I've personally read Meditations probably 3 times now, and I will continue to read it throughout my life. Very important. So make sure you're rereading the greats. It's better to have like 10 solid books that are great and continue to reread those over your life than just read 1,000 books and not really pick up on anything. That's my opinion on that. So become a stoic person, and basically I'll just touch on that a bit. Stoicism is not letting things bother you. Essentially, it's I guess it's a quick way to put it. It's really hard to explain it in just like a quick sentence like that, but we need to be stoic, and we need to not let things bother us. We need to have discipline. And if you work on things in real life, it will only make you become a better trader. If you wake up in the morning every day and you dress like a slob and you order McDonald's, you don't work out, you don't go on walks, you just sit around all day, scroll on your phone all day. Anytime anybody calls you out on anything, let's say you're living at home and your mom says, oh, you got to clean your room, and you snap on her because she told you to do something, that's just going to reflect in your trading, like pretty much 100%. I would doubt that somebody like that would be a good trader because they probably would revenge trade because they're pissed off or whatever. So by working on ourselves in real life, we can become better traders. I take my word for it. It's worked for me firsthand because I won't lie. Everybody's revenge traded. I haven't done that too bad. It's never like damaged my account or anything, but I would get frustrated at losses. Why? Well, because I would get frustrated at things in real life. And look, I still get frustrated at things in real life. I am constantly working on this. So just constantly work on yourself, learn, and it'll help you become a better trader. I promise you. So I won't touch on this too much more. Again, go back and listen to my podcast, Become a Better Person, Become a Better Trader. It's about, I think, 40 minutes of me talking about that, and I'll probably do another episode on that as well. So that's number 2, become a stoic person to become a professional stoic trader. Number 3, stick to one trading strategy. This is huge. Backtest it and continue to trade it and do minor tweaks on it for the entire year. Let's say you're like really a beginner, like you haven't even learned any strategy yet. I'm not against you exploring, right? So let's say it's January 2026. I'm not against you exploring around for the first month or maybe for the first quarter, seeing different strategies, support and resistance, supply and demand, whatever. Learn them all. Not maybe don't go into full detail and learn them all, but like watch some videos on them and then go to a chart, try to just mimic what you're seeing in the videos just for like a bit and just see what really resonates with you. With that, where as far as this goes, for my trading journey, supply and demand was the thing that really resonated with me the most. It's not how I started trading, but I was fortunate enough to learn supply and demand trading pretty early into my trading career, within like the first 6 months, I believe it was. And at first it was just typical support and resistance, and then like lines, and then like it kind of turned into support and resistance zones. I was in a mentorship, and the person's mentorship I was in, he just mentioned supply and demand, and then that spiked curiosity. I'm like, supply and demand, that's how the markets work. How can I learn supply and demand for trading? And then I just started getting into it, watched a few Sam Seiden videos, and it just really resonated with me. It really made sense to me. So that's why I trade supply and demand. And look, of course I have a bias here, so I'm just immediately going to tell you my bias. I trade supply and demand. If you guys don't know, I trade supply and demand. So I am biased towards this strategy. I think it's great. That's what I teach in the group as well to everybody. So I do have a bias here. But to me, it really resonated with me the most because, again, the markets react to supply and demand. That's how markets work. It's kind of like how if you jump from a building, you're going to fall. It's just nature, right? And it's the same thing with supply and demand. That's how the markets work, through supply and demand. So that's why it resonated with me so much. And maybe supply and demand doesn't resonate with you. Maybe it's support and resistance. Maybe it's trend lines. Whatever. Explore around until you find that one where that really resonates with you. And let's say that takes you 3 months to figure that out. That's fine. But then for the rest of the year, stick to that one trading strategy. Back test it. Continue to trade it. And throughout the year, you'll probably have to make some minor tweaks on the strategy, or learn different things within the strategy, right? And then this one kind of ties into the next point, the fourth thing I would focus on in 2026 if I was a beginner trader, is journaling your trades. So number 3, stick to one trading strategy. And I'll touch on this too for a second. The problem is, again, all these kind of tie into each other. Stick to one trading strategy. A lot of the time people move strategies is why? Well, it's because these fake gurus who, again, are showing these watches and have 500,000 subs on YouTube, they're always strategy hopping. And they're not actually strategy hopping. They're just capitalizing on a search term, essentially, so that they can get all of the different viewers, right? So for my YouTube channel, I only trade supply and demand. You can go back and watch all my videos on YouTube. It's always been supply and demand. I've got about 50,000 subscribers now, and I appreciate every single one of you guys. It's been a crazy journey, and it's been awesome. So I just want to say that. But I would have such a bigger following. I'd make so much more money on YouTube if I just did a video on SMC, did a video on support and resistance, and just acted like I did all these different things so that I can get, people to find my videos through those search terms. So my market, my audience is limited to supply and demand, and that's fine because that's the strategy that I trade. I get requests all the time. You got to do a video on SMC. You got to do a video on support and resistance. I'm not going to do that because first of all, I don't know anything about it. 2, I don't trade it, so I'm not going to do something I'm not going to talk about something that I don't do. So stick to one strategy. You got to understand that the reason these fake gurus are switching strategies all the time is just to get in the search results, guys. That is it. Just so they can sell a course on that. Just so they can capitalize on that audience, right? They sell a course for this audience, and then they sell a course for the other audience, and this audience, and that audience. It's all a money-making scheme. And again, I've been very upfront with everybody. I've done a whole video on that. I've done a whole podcast rather on, do you need a trading mentor? I am a trading mentor, so I'm very upfront with that. I do make money from that. I have no issue with saying that, and it's just a side income. But again, I could probably increase that by 5 times if I just switched strategies all the time, or acted like I switched strategies and pretended like I did, just to sell another course. So it's just funny how all these points kind of tie in together. So stick to one strategy, back test it. That's important as well. Make sure you are back testing it, whether that's you're using the back testing tool on TradingView or you're just marking out, let's just say for supply and demand, marking out supply and demand zones throughout the week, seeing how they react. Continue to trade that, stick to that strategy. Cannot recommend that enough. People don't give enough time for these strategies. That's the problem. Especially if like you're swing trading, like you can have 2-3 months in a row with no profit. Then that's reality. As you get better, that will probably not be the case, but it's possible. So I understand why if you just try supply and demand trading, like for example, September was a terrible month this year. And I could see somebody joining my group or learning supply and demand for September. It's like, geez, every zone failed. Like, what the heck's going on? This strategy doesn't work. It's like, well, then you should have seen October. You know what I mean? So it's you got to give it time. And a lot of people are just impatient. And all of that ties into as well. They think that they're going to make $100 a day or turn 50 to 50 grand. And when they don't do that within 2 weeks or a month, they just quit or they change strategies. Don't do that. Stick to the same strategy for at least a year. And then like I mentioned, you'll do minor tweaks for it throughout the year. And that ties into number 4, which is journaling our trades. The reason we want to journal our trades is so that we can see what needs to be tweaked. Sometimes simply just doing something like changing the risk reward that you're going for can help you go from a losing trader to a winning trader. And journaling will help you see that 100%. So let's say you journal your trades. One good tip for journaling your trades is, I'm just going to make something up so you guys can, an example so you guys can understand. Let's say you're trading supply and demand and you're looking for a 2-to-1 risk reward, just blanket 2-to-1. But then you don't have a journal. And let's say you make 6% that year, let's just say you make 10% that year doing that. It's pretty good. It's very good. I know a lot of people are like, that's good. Yes, that's good. So let's say you're looking for 2-to-1s, you make 10% a year, great. Well, if you didn't journal, maybe you actually could have been looking for 3-to-1s. So what you do in your journal is you just have like a spot. So I don't know, it depends on what you use, like Excel, or I like to use Excel. Use Excel and you can just put in all the metrics of the trade. Was it with the trend on the higher time frame, against the trend, whatever. So many different metrics you'll have to just explore. And then one metric you could have is how far did this trade end up going? Or another good one is, should I have moved my stop to break even or not? Right? So let's just, those are 2 examples. Let's stick to one for the sake of keeping it simple. So what you could have in your journal is marking out how far the trade went before it came back in and broke through your zone. So let's say you just take trades at 2-to-1. That's fine. Stick to that all year. That's perfect. But in your journal, have how far it went. So you could just have another little box next to it and say, this trade, I took my profit 2-to-1, check, or whatever. And then in the next section or column, whatever you want to call it, you can have how far did it go. Because you might start noticing 3-to-1 was actually a little bit better. And then you'll have to understand that your win rate will probably be less with the 3-to-1, but maybe just simply changing that risk reward you go for can help you go from 8%, 10% to like 15, 16%. Smaller win rate, but larger risk reward. And the only way you're going to be able to understand that is by journaling your trades. That's it. There's no way to actually have that data. You might have in the back of your head, I should probably going for more, but if you don't have the actual data, then you won't really know. And that could, I'm talking about going from 8% to 15%. This could really change you from becoming a losing trader to a winning trader. It literally could. Maybe you have enough data to be like, wow, throughout the year I took 100 trades, let's just say. And like 12 of those, or let's just say, 15 of those, 20 of those went 10-to-1. That's important information that you should have. And then from there, you should journal, when you should move like how many times price came back to your zone, right? So which is good information on, should you move your stop to break even? Things like that. So that's why journaling is so important. it can literally change you from becoming a losing trader to a winning trader. Just one minor tweak, and you won't know it unless you journal. It's really that simple. Me now, I've kind of, I'm comfortable now. I'm doing good. I don't really journal my trades too much anymore. I'll be completely honest. I probably should get back into it. I really have no excuse other than I'm doing pretty good. But it doesn't hurt. So again, journal your trades, stick to that one strategy, and then from there you can do minor tweaks that will only benefit you. And that is number 4, journal your trades. Number 5, the last thing I would do, there's plenty more things here as well that I would do, but these are the top 5. Number 5, and this is probably a controversial one, and I don't care. Get the best job that you can get. Why? So that you can fund your trading account and take stress off of your trading so that you can be professional. Forget the prop firm challenges. Build your account long term. Now, I'm not saying you can't do prop firm challenges. I'm not saying any of that. On the topic of prop firm challenges, to me, from my research, it seems like the rules they just kind of handcuff you in the rules. The fees are high, the commissions are high to try to just get you to fail. And then even when you are successful, they seem to ban you or find a reason to ban you or say, oh, you're violating our risk management rules or something like that. That's from my own, it's not from my own personal experience. That's just from what I've seen. So I'm a big believer in trading your own personal account long-term. And building it long-term. And I've talked about this before. You're not going to like if you have, all I have is $500 to fund my trading account. Should I do it? Yeah, fair enough. I mean, if it's your only $500, maybe not. I'd probably get a better job so you can get more money. But the idea that you're going to turn your $500 into like a $50,000 portfolio one day is just not going to happen. I'm sorry. You can make 100% a year. That would take you a long time. I'm not a math guy, but if you have a $500 account and turn it to 50 grand, that's 100% a year. Think about how many years it's going to take to do that. So that's why we need to have the best job that you can get so that you can fund your account. And it's a win-win because not everybody's going to become a successful trader. So let's say you get a better job. Let's say, okay, you know what, Kev? Yeah, you're right. I'm going to work on my skills, try to get a better job, put out my resumes at this place, put out my resumes at that place, whatever. Let's say you get that better job. Now you're making 4 times as much as you did or 3 times as much as you did. And then you become a trader, you start to trade, fund your account, and now you're trading and working, and now you can take time off, and maybe you could quit, whatever. I don't really recommend that unless everyone's situation is different. But by getting that better job, it's a win-win. You could become a trader and whatever, you have a good job too, and it's like a side business that you're doing. Perfect. Let's say you don't become a trader. Well, you have a good job. You have a best job that you can get. What's wrong with that? And it's this big lie of like, oh, quit your 9 to 5 to become a trader. That is very difficult, and I'm here to slap everybody back into reality. Yeah, it sounds great, but you need to get a good job so that we can fund our account. And not only fund our account, but it takes stress off of your trading. Like I've had people message me like, I need to make money the next week so that I can pay my internet or whatever. It's like, okay, well, you definitely shouldn't be trading. That's for sure. Yes, it could really work out for you, but that's not what I would be doing if I was broke trying to pay my bills next week. That is literally not what I'd be doing. So it takes stress off of your trading as well, which is very important. You don't want to be stressed out, because if you're stressed out trading, that's going to lead to negative results, most likely, because you lose a trade. You're like, well, now I'm really down. Now I really need to get it back. And then maybe you double the risk, move your stop loss, it's just going to screw you over. So I've talked about it before. Get the best job you can get, guys. It's so important. Making that money from non-trading related activities is so important. There's really not much else to say. Hopefully I explained that well enough for you guys. And that's a controversial one, because everybody on all these fake gurus, $0 to $100 a day. Well, if you make $100 a day, you don't have to work. It's like all this big marketing thing to get you away from your 9 to 5. And there's nothing wrong with a 9 to 5. There really isn't. And let's say you have a 9 to 5, and let's say you make, I don't know, I'm using Canadian dollar terms here, or I'll use US dollar terms. Let's say you make $75,000, $80,000 a year at your job. Very good money, right? Everybody wishes it was more, but that's pretty good money. And then let's say you're trading and you make $70,000 a year trading. Let's just do that blanket number. Are you really going to quit your job? You're going to lose out on basically half of that income. Are you really going to quit your job, or are you just going to take more time off from your job because you have kind of a side hustle now, a side business? So think about that, right? And then it really all depends on your lifestyle of if you're going to quit your job. If you are older and you already have a home and family, and then your home's paid off for, and you make a decent amount of chunk from trading, you might be able to quit your job. Everybody's different, but if you're young, we should be in our grind mode. I kind of hate the grind culture, but I kind of like it as well. We should be in our grind culture. Why not work pretty much full time, making 80, 75 grand, 75, 80 grand a year, and then also make 50 grand a year from trading? Why wouldn't you want both? That's a lot of money. So it's kind of this big lie of you got to quit your job. And I get it. There are some jobs that if I had that job and then I was making money from trading, well, I'm not working here. What the heck? You know what I mean? It had to be a pretty low paying job. But, there's pretty much be no reason to quit. Because again, these returns, these guys, the big quit your 9 to 5 scam is such a lie, because it's all based off of these numbers that these guys post. I got one guy he comes up on my Instagram because he's always running ads. He's crying in his stories. I did not know this was possible. All this BS marketing, fake tears crap. And he posts P&L 40 grand a day. Give me a break. 40 grand a day. Do you know how big your account would have to be? If you're not over risking to make 40 grand a day trading? You have to have a massive account, or you're over risking. And that's not if anybody who's ever traded ever, it's just funny. All these guys are always winning, and anybody who's ever traded ever knows that it's not possible. It's all just to screw over the beginners and psychologically manipulate them. So number 5 is get the best job that you can get. Again, I know that's controversial, but trust me, we are trying to be professionals here. We are trying to learn. We're trying to learn and grow our account and become professionals. We're not rushing anything. We're not trying to quit our 9 to 5. We're actually trying to get a better 9 to 5. And then even working from home seems like a great option now for that, where you can kind of do both pretty easily. Those are the five things I'd be working on this year. To recap, number 1, stop following the fake gurus who are using scummy marketing tactics. Number 2, become a stoic person to become a professional stoic trader. So work on yourself. Number 3, stick to one trading strategy. Number 4, journal your trades so you can see what needs to be tweaked. And number 5, get the best job that you can get. So those are the 5 things I'd be working on. If you guys have any questions, feel free to send me a message on Instagram asking me specific questions about this. Pardon me, or whatever you need to do. But if you work on these 5 things, in my opinion, you will be on the right path. So that's what I'd be doing. I appreciate everybody listening. 2025 was great. And if it wasn't great for you again, that's fine. 2026 is here. We're going to take it seriously. Accept that this is a long-term game. Accept the fact that in 2026, you're not going to quit your job. You're actually going to be looking for a better job. You're not going to make $100,000 trading. You're just not. And I'm here to tell you that. And that doesn't mean that you won't be successful one day. And that doesn't mean you won't make 100 grand trading one day. It's very possible. Trust me, it is. So here's to 2026. On not related to trading, I hope you guys had a great year. It was a great year for me, outside of trading as well. I'm a father now, and that to me, I'm a billionaire because I'm a father. It's the greatest thing ever. And yeah, so I pretty much have nothing else to say. Again, check me out on YouTube if you're listening to me from the podcast app, FX Telepath. I teach supply and demand trading. I offer the most value that I can, without any marketing gimmicks or any of that crap. Just pure trading education to help you become a better trader. And that's why I do this podcast as well, because it's not just about technical analysis. It is about technical analysis combined with a psychological edge as well. It's both of those things combined. I could literally give you my signals all year next year. And if you don't have the psychological aspect of trading down, if you don't have the discipline down, if you don't have the ability to hold a trade when it's in drawdown, this is not for you. So hopefully this podcast helps you. I appreciate everybody that's been following me. I appreciate you more than you know. And here's to 2026. Here's to a great year. Work on these things, and I promise you will be on the right path to success. All right, everybody, I'm signing out for the year. Take care.